Welcome, and thank you very much for finding my video or podcast when you're doing a home search on the web for who does USDA in the state of Nevada. USDA, that's right, United States Department of Agriculture, has a lending division for homes called the RD, the Rural Development. This is a great program. If you're limited on funds, you meet all the underwriting criteria, which every loan has an underwriting criteria. You can purchase a property with absolutely no money for the down payment. So I'd like to go over some of the steps when buying a home in Nevada utilizing the USDA program. You have to get approved for it just like every other program out there. There is a way for you to buy a home utilizing the USDA program in Nevada with probably about $1,000. So I'll go into that and explain where. So if you're limited on funds, look at the USDA. Now, there's really only two really populated cities in Nevada, which is the Reno area and the Las Vegas area. So there's a vast majority of land out there that is approved in the USDA. Whether you want to live in there or not is the question. But I want to go over that through this podcast. And if you're listening through the podcast, because I'm doing this on video as well, there's a link below to this video so you can watch the video and see where the approved areas in Nevada are. But the USDA is no money for the down payment. You do have to open up escrow, what's called an EMD, an earnest money deposit, and speak with your realtor about that, because you guys can connect and see how much you want to open up escrow with, whether it be $500, $1,000, $2,000, whatever the amount that you guys agree upon that to present to the seller. That's what you're going to talk about. Those monies will go towards the closing cost. You can put money down utilizing the USDA program. They're not limited you to put no money down. You can put anything down that you want, but it's a no money down payment purchase program in the state of Nevada. There are restrictions, just like every program out there, as I indicated earlier. There is a debt ratio requirement. This debt ratio requirement is lower than what it would be on a conventional VA or an FHA. So they're really going to restrict you on how much your debt to income ratio can be, and that changes. But for right now, it's much lower than what VA, FHA, and conventional require. So they got a front end debt ratio, which is your income, gross income on what the housing expenses will be, and a back end ratio is what your income is, gross income on what the housing will be, plus your other debt that's going to appear on the credit report. So they're going to restrict you on that. They're going to restrict you on income. The other programs, you can make as much money as you want. But as of today, now this will change. So if you listen to this video 2 or 3 years from now, when I created this video, it can be higher, it can be lower. But for the trending, when I started doing USDA, the trending for income has only gone up. So they classify as of today 1 to 4 persons in the household. So that's 1 to 4 people. You cannot exceed $103,500. That is the floor in the Las Vegas area. So if you're making $150,000 and there's 3 of you in the household, you will not qualify for this program. The max gross income that you can make from 1 to 4 people are $103,500. So you cannot make more than that. If there's 5 to 8 people plus, you cannot exceed $136,600. So there again, if there's 6 people in a household and you make $150,000, you make too much income for this program. You won't qualify for it. So you cannot exceed those. You can make the minimum as long as the debt ratio will handle the purchase. You just can't exceed a gross amount of income depending on how many dependents are in the household. So you got a debt ratio requirement. You got an income requirement. You have no money that you want to put down unless you want to. And the other is area, obviously. So I'm going to have a link below on the area. So if you're looking for a particular area that's outside of the Reno area as well as the Las Vegas area, this program, you need to explore it with no question. So here's the USDA site. But here's the link I'm going to have below, because it's a long link. I'm going to have this link below that you can click on to make sure the area is approved. It's going to take you to this site here. It's the property eligibility. You're going to press accept. And I already have an address that I copying and pasting here in Boulder City outside of Las Vegas. So this little line area here, you're going to put in an address. You're going to press go. And it's going to say this address is located in an eligible area. So that's green. If it wasn't, it would be red. But let me pan out here. All the shaded area, you can see the vast majority of Las Vegas is shaded. All those darkened areas are not approved in USDA lending. You can go out here to Pahrump. I know it's a little bit of drive over to Las Vegas, but Pahrump is an approved USDA lending area, as well as Jean and obviously State Line. But panning out here more in Nevada, you can see Mesquite going up northern into Utah. Mesquite is an approved lending area, great growing area that you can move to and look at the USDA program. Close to St. George, close to Las Vegas, but Mesquite is an approved lending area. Going up to northern Nevada, as I'm panning out on the map, you can see the vast majority of Nevada is an approved USDA lending area. It's just not heavily populated as the Reno, Carson City area is. But I'm going to go closer to the Reno, Carson City area. Down there in Virginia City, between Reno and Carson City isn't approved. So you really got to fine tune and really search the areas that you want to live in Nevada. But if it's not in Reno City or Carson City or Las Vegas area, I know there's other cities in the Las Vegas metro area that are not in the approved areas, such as Paradise and Henderson and Summerlin and all that kind of stuff. So Spring Valley, that is not an approved area. But if you're going out, and I know when you drive further out of Las Vegas, there's nothing there to purchase that you would want to move into. Obviously, when you're moving to Nevada, you want to move to the Las Vegas proper area that you're in the metro area of Vegas. But if you go out to Boulder City, look at this map. I'm going to have the link below. And like I said, you can really go down on this map to the street level. That's out just outside of the USDA lending area. And if it's an approved, we can lend in that area on the USDA program. But we need to make sure you meet the debt ratio requirement, make sure you meet the income requirement, and the property is in the approved USDA lending area. Now, no money down for the down payment, and there is closing costs. Every loan's going to have closing costs. The seller can pay for your closing costs if they elect to do that. You can get a gift from a family member to pay for your closing costs. Your own checking, savings, stocks, bonds, IRAs, mutual funds, 401k, 403b. You can pull that money out and utilize that for the closing cost. Now, if this is the only program that will allow us to finance your closing cost in Nevada on the USDA, it's the only program is the USDA. If the property appraises higher than the agreed upon purchase amount, so let's say you're buying it for $300,000, that property appraises for $310,000. You got $10,000 worth of equity. USDA will allow us to finance those closing costs. That's the only purchase program that will allow us to do that, is finance that closing cost with that freed up equity. So basically, for around $1,000, depending, you got to do a home inspection, which is not required but highly, highly recommended. Home inspection in between $350 to $500. Connect with your realtor; they're going to have connections to a home inspector. So you have to pay for that out of pocket, and the appraisal. The appraisal is about $500 today, depending on location. Obviously, if the location is further out in a rural area, the appraisal costs may go up because of the distance and the availability of an appraiser. So if it's further out and the availability of the appraisers are limited, it may cost you a little bit more for the appraisal. But for around $1,000, give or take, you can purchase a property in the state of Nevada for utilizing the USDA program. That's right, about $1,000, because you're absolutely no money for the down payment. That's 100% financing, and the seller can pay for your closing cost, and the property appraises higher, or the property appraises higher than the agreed upon purchase price that we can finance those closing costs. You're about $1,000. Now, the appraisal appraises for $300. You're buying it for $300. Then we can't utilize that freed up equity. So the closing costs will come from you, gift funds, or the seller can pay for your closing cost. So you're still buying it for about $1,000, give or take. So this is a great, great program in Nevada. If you're limited on funds and you want to own property, And it may not be in the area that you want to be in because it's in closer to Las Vegas or Reno or Carson City. But if you can go a little bit further out of those cities, I'm scrolling here, like Virginia City or Mesquite. I know Mesquite's a little drive down to Las Vegas. And there's really not much in between Mesquite and Las Vegas. Boulder City, Jean, there's nothing in Jean. There's not much in State Line. But if you're looking further out of Las Vegas, like Pahrump, look at the USDA home loan program in Nevada. It's the only one that will allow us to finance your closing costs. It's 100% financing. The only 100% financing is a VA loan. But you have to be a veteran, active, or retired military to receive the VA. And if you're not that, then USDA is another great alternative to explore. Do you qualify for it? Great. Let's get you going on the USDA. It's a great program. It's not limited to first-time home buyers either. So if you sold a property 3 weeks ago and moving to Nevada, let's look at the USDA program, as long as you qualify. And that's where we got to connect. I look at your credit. I discuss your income. And if you exceed the income limit, then USDA is not it. Maybe you have to default to an FHA or a conventional, depending on what your credit score is. So you still got to credit qualify, income qualify, and debt ratio qualify on the USDA like you would do on the conventional, the VA, or the FHA program. But this is a great alternative if you're limited on funds. And we can negotiate. Right now, we're seeing it turning into a buyer's market. We either got two markets, a seller market or a buyer's market. And that's when your realtor, your trusted realtor, he or she must go to that listing agent and really present your offer and get closing costs out of them. And they can say yes or they can say no. At least you can do is ask to pay for those closing costs. They don't have to pay all the closing costs. They can pay some of the closing cost. So you're coming in with a little bit less for the closing costs at the end of the process. But you're going to have to open up escrow with something, and that something, whatever that dollar amount is going to be applied for your closing costs. The other way we can do is up your interest rate. So we can up your interest rate slightly. Now it's going to take your debt ratio up. It's going to take your payment up. But the higher the debt, the interest rate you, the consumer, the buyer, elects to take, we don't make any more money as a lender. We give you what's called a lender credit. The higher interest rate you take, we will give you a lender credit towards closing costs. So that's another alternative, but we do got to watch the payment and we got to watch the debt to income ratio at that point as well if you elect to increase your interest rate. But that's another alternative. So we can find money when it comes to the USDA because it's absolutely no money for the down payment. We can find money through the selling side, through the interest rate side, through your own side, or through the equity of the property, or you can get a gift. So those are the ways we can get money towards the closing cost. You like this video? Give me a thumbs up, comment. Love to connect with you about the USDA program in the state of Nevada. A lot of people are moving there. It's one of the places, let me hone down in here, one of the top 10 places people are moving to, if not the top 3 places people are moving to, is the Las Vegas area. But you can see this whole state practically is in USDA territory, but obviously the 3 big cities, Carson City, Reno, and Las Vegas area. But if you're moving to Nevada, and it's got to be your primary residence, it cannot be a second home, like a vacation home or an Airbnb, and it can't be an investment property. This must be your primary property that you're going to live in. My name is Nathan Rufty. I'm a licensed lender in the state of Nevada. I'd love to connect with you and talk to you about the USDA program. If you have money and you don't want to spend it, then let's go over the USDA. But it's a great program, and it's not limited to first-time home buyers. So anybody that qualifies for it can apply for it. Okay? Give me a thumbs up if this video was helpful. On the podcast, if you're listening to the podcast, I'm going to have the link to this video below, so you can go click on the links on finding the area here for the USDA, if it's an approved area or not. So I have that link below. I have the link below also on the podcast and the video for our interest rates on the USDA program, and the link to this video, to the site, and to our interest rates. Comment, like, and share. Give me a thumbs up on this video. That would help me out. Call me direct or text me at 909-503-5600. And my name's Nathan Rufty. I look forward to connecting with you. Thank you very much.